traders, my name is Horat and welcome to a new free video in which we will take a look on one very common Elliott wave pattern. Okay, and then we will also take a look on the live example on the euro dollar. So here we have basically the most common wave pattern. It's a free wave pattern labeled as an ABC. Okay, and where first leg wave A needs to be subdivided by 5 waves, then we have a free wave pullback, and once this free wave pullback is finished, then you will see another 5 wave decline in the direction of a trend, which in our case is down if we respect this first leg. Okay, so basically this is the most common Elliott wave pattern. It, as I said, it can be an ABC move, or it can also be a larger start of a larger 5 wave decline. Okay, let's say that this was wave 1, wave 2 pullback, and then we will see a wave 3 down, extended wave 3, which means larger, more sharp drop in price compared to wave C, and then you will see a wave 4 pullback and wave 5 down. So in both cases you would expect a free wave to the downside. Okay, so now we will take a look on the live euro dollar and see what we have there, if we have any similar wave structure on the live markets. So here I have the euro dollar. This is my daily wave count. Okay, this is the daily wave count that we constantly updated for clients. And here we can see that from 2013 highs, which was in at the end of January, the market moved very sharply to the downside. Okay, and I can see here that this decline can be counted in 5 waves. Okay, now sometimes these bar charts are not very clear. Okay, so you can easily switch it to the line chart. You can see that these spikes are gone, and now the wave structure is looking much better. Okay, I can see 5 waves down. This was wave 1, wave 2, wave 3, wave 4, and this was our wave 5. Okay, so this was the first 5 waves. Okay, now if we go back to this, you can see that we just identified this 5 wave decline. Okay, so it's not important if this is maybe wave A or it's maybe this wave 1. Okay, in either case we know the trend has turned temporary bearish. Okay, but of course before we may look for a downtrend continuation, we need to wait on finished free wave rally. Okay, so our clients will know that we recognized and we even called end of a wave 5 of wave 1 right here when the market reversed sharply to the upside on the intraday basis, and since then you can see that market is actually moving higher. Firstly it was up in wave A, then it was trading lower, which we thought that this will be a start of a new bearish leg. However, the market turned higher last week, and you can see that now this is actually still only a free wave rise. Okay, so I suspect that this free wave rise, okay, represents this part shown here. Okay, exactly the same free wave rise. Okay, so I think this is only a temporary pullback within a larger downtrend, and that sooner or later market will turn lower and make another 5 waves of decline, similar to what we experienced in the first leg. Okay, so this was our first leg, and of course if we are correct, then market will make 5 waves to the downside and will move beneath this level. Okay, beneath this wave 1 or maybe wave A. Okay, in either case our bias is to the downside. Okay, now the most important in Elliott wave theory is confirming price action. What is confirming price action? Well, this is the price action which confirms your bias. Okay, let's say that you are bullish and you can see then, and you see that market is falling, then you of course will wait firstly on a bullish reaction on your confirmation, and then you will potentially look for a trading setup. Okay, so this is a confirming price action. So, and the same is on this euro dollar. Yes, I'm tracking this free wave movement to the upside. on the live chart, but there are many different Elliott wave counts and interpretations possible on live markets. Okay, so of course, before my wave count can be confirmed, because I always can be wrong, of course, I'm not 100% guy who is always right on this market. Okay, so I want firstly to see if I am on the right side. So in such case, of course, I want to see impulsive reversal lower from potential top of this free wave rally. Okay, so once we will get a sharp drop in price, only then I will confirm end of a free wave rally, and I will say yes, this was a free wave rally, we are moving lower. Okay, so I will be waiting very patiently on this retracement if we get it. Okay, if not, then okay, this market will go higher, but I will not be on the right side of the market, because I will not go short if I will not see this drop in price, a confirming price action. Okay, so here we are now, deeply higher in this wave C. We can also see that this free wave movement retraced for 61.8% compared to previous decline. This is a very common Fibonacci level. So if we are bearish, then this is definitely very important region where we need to pay a special attention to it for a possible reversal to the downside. So as I said, if we will get a reversal to the downside in 5 waves, then of course this will be our confirmation that this rally is complete and that this market will be headed lower in impulsive manner, and in such case you would of course expect that this corrective recovery will be fully retraced. Okay, so I'm waiting on this impulsive reaction to the downside, which will confirm my bias, which will confirm a downtrend, and meanwhile of course we need to keep an eye on this level. Why? Because we know that this corrective rally must not retrace more than 100% of this decline. Okay, same as shown here. Okay, this was a 5-wave rally and this was a wave B pullback, which did not exceed these previous highs or start of this wave A. Okay, so this decline should unfold if we will go lower anywhere between this, anywhere beneath these swing highs. Okay, traders, that's it, and I will catch you next time with our free video. Have a good day.